Then we have the journal proper or general journal, used for recording other transactions. That is, other transactions that cannot be recorded in these subsidiary books and others will be recorded in a book known as journal proper or general journal. We have the ruling of journal proper here. We have journal proper. It is ruled this way. We have particulars, debit and credit. What the journal proper does is to show us account to be debited and account to be credited in relation to a particular transaction or group of transactions. Now, the particulars is where the transaction is recorded. If such transaction has a debit balance, the amount involved in such transaction will be recorded on the debit side. And if such transaction has a credit balance, the amount involved in such transactions will be written or recorded on the credit side. An illustration is shown here. This is also a journal proper. We included the date here and the ledger folio because in some questions the date will be involved and the folio number will also be involved. So the full ruling or the elaborate ruling of journal proper looks this way. We have date, particulars, ledger folio, amount debited and amount credited. We took an illustration in relation to rent payment. In this illustration, rent of $500 was paid. If you recall from our knowledge of cash book, when rent is paid, the rent account will be debited and the cash account will be credited because the cashier or the cash account gives out the money for the payment of rent while the rent account receives the money. In these two transactions, rent is the receiver and cash is the giver. The reason why the cash was paid out was because of rent. Therefore, rent is the receiver and has to be debited. If you watch properly, you will discover that the account to be debited is written first. It's rent account and the amount involved is $500 recorded on the debit side. Then the cash account that is to be credited is written on the credit side. Usually in the journal proper, the account to be debited comes first, while the account to be credited comes next. You have to make a narration. You narrate what has actually happened. And what really happened here is that rent was paid. And we used the language being amount paid as rent. Now, the narration here is being amount paid as rent. So in the journal proper, one, the account to be debited should come first, while the account to be credited should come next. Then you make your narration. And the narration must always begin with the word being. Being amount for this, being amount for the other. Things to be noted about the journal proper: the account to be debited comes first and the amount involved is placed at the debit side. The account to be credited comes next and the amount involved is recorded on the credit side. When you are making your narration, you begin with the word being. Like here, our narration is being amount paid as rent. So, account to be debited is recognized. The column for debit entries is here. The account to be credited is recognized and placed at the column for credit entries. So, journal proper is all about showing account to be debited and account to be credited. It can be used by an examiner to test your knowledge of accounts to be debited and accounts to be credited. As we progress, we are going to make more illustrations using the journal proper. We are going to tell you the kinds of transactions that are usually recorded in the journal proper. We have just used the rent account to make an illustration. The journal proper is not meant for recording transactions as rent, but we have used this to demonstrate how entries are made in the journal proper. We have talked about subsidiary books and the books that are involved. In a trading organization, a very large proportion of transactions relates to credit sales, sales returns, that is goods sold on credit that are now returns, credit purchases, purchases returns or returns outwards, that is goods purchased but has been returned to the suppliers. If these transactions are posted directly to the ledgers as they occur, the purchases account, the sales account, the return inwards account, the return outwards account, respectively, will end up containing too much details. Apart from the four transactions which relates to credit transactions, another transaction or transactions that occurs in a very large number is the receipt and payment of money. To prevent the ledgers from being clustered up with too many details, the cash account and the bank account are taken out from the ledger and combined in one subsidiary book known as the cash book. Apart from these transactions mentioned in relation to subsidiary books, we also have another subsidiary book known as the journal proper or the general journal. Other transactions that cannot be recorded in these other subsidiary books mentioned are recorded in the journal proper before they are posted to the ledgers. The question is, what are journals? We are going to be looking at journals from two perspectives. One, the specialized journals, which relates to recording credit transactions such as credit purchases, credit sales, return outwards in relation to the credit purchases, return inwards in relation to the credit sales. These will be summarized in the specialized journals. And after the recording, the summary gotten will now be posted to the appropriate ledgers. So we are looking at journals. Journals are day books in which daily transactions are recorded as they occur. In the context of journal, in our foundation study, we are talking about credit transactions. Two types of journals to be considered are the specialized journals and the journal proper, which can also be called the general journal. Under the specialized journal, we are going to be looking at specifically four types of journals. The purchases day book, which can also be called the purchases journals. The return outwards day book, which can also be called the return outwards journal. The sales day book, which can also be called the sales journals. And the return inwards journal, which can also be called sales returns journals. Note that the purchases day book can be called the purchases journals. The sales day book can be called the sales journals. The return inwards day book can be called return inwards journals, while the return outwards day book can be called the return outwards journals. Don't forget that return inwards can also be called sales returns, and that return outwards can also be called purchases returns. In the context of our treatment, we are going to be looking at how credit transactions can be summarized using these books. After the treatment of these four journals, we are going to be looking at the journal proper, which can also be called the general journal. In dealing with the general journals or the journal proper, we are going to look at their uses. Of course, they are used in recording transactions that cannot be recorded in the other subsidiary books, as mentioned earlier. The journals. We said journals are day books in which daily transactions are recorded as they occur. The journals here relates to credit transactions. Two types of journal to be considered are specialized journal and journal proper, which can also be called the general journal. Under the specialized journal, we are going to be looking at purchases day book, return outwards day book, sales day book, returns inwards day book, cash book, and petty cash book. So the journal proper, which can also be called the general journal, is specifically used for recording any other transaction which cannot be recorded in any of the other subsidiary books mentioned above. And the subsidiary books mentioned above are the purchases day book, returns outwards day book, sales day book, returns inwards day book, cash book, and petty cash book. Once any transaction cannot be recorded in these books, then the appropriate book for recording it is the journal proper or the general journal. Apart from these transactions mentioned here, like purchases and sales of non-current assets, there are other many transactions that are specifically reserved for the journal proper or the general journal due to the fact that they cannot be recorded in these subsidiary books. As we progress in our study, we shall bring some of these books into consideration. For now, we are going to limit our studies to these books here for the sake of our foundation knowledge. We are going to be looking at how transactions are recorded on the purchases day book or the purchases journals. The purpose of using the purchases day book is to summarize the credit purchases, which will subsequently be transferred to their appropriate ledgers or accounts. Firstly, we are going to be looking at how the ruling of the purchases day book can be done and the various headings attached to it. And thereafter, we are going to take an illustration to demonstrate how credit purchases are summarized using the purchases day book and how these summarized transactions can be posted to their appropriate ledgers and accounts. We are also going to be looking at how trial balance can be extracted from these transactions. The purchases day book, which can also be called purchases journals, can be used in this manner. We have the date, the particulars, invoice number, details, subtotal, and total invoice value. There may be varieties of meanings of the purchases day book, but these headings here are the main ones that I require you to know at this our foundation stage of learning. Now let us take a transaction to see how recordings are made on the purchases day book. Of course, the date is where the date of the transactions can be recorded, the particulars, who is involved, the name of the suppliers, the quantity of goods purchased, and the unit price, and others can be recorded here. Then under the invoice number attached, due to the fact that it's a credit transactions, will be recorded at this line or at this column. Then details of the transactions will be here, the subtotals will be here, and the total invoice value will be here. As you go on with our recording and you understand more about what each of these columns really represents. Recall that when we treated the three columns cash book, we made a posting in relation to Mustafa and Mark. Let us assume that Victory Enterprises purchased 5 cartons of baby soap at $15 per carton. If this transaction was to be recorded inside the ledgers, it will contain too many details that it cannot be recorded, since most of the ledgers are interested in the debit and credit transaction as it relates to accounting. Now, the journal is going to be used to summarize the purchases of these 5 cartons of baby soap at $15 per carton. And thereafter, it is going to be posted to the appropriate ledgers, and after that, the trial balance will be extracted. Now let's see how it can be recorded using the purchases daybook. Now we have Victory Enterprises and we are preparing purchases daybook or the purchases journal for Victory Enterprises. Let's assume that on January 3rd, 2021, Victory Enterprises purchased from Mustafa 5 cartons of baby soap at $15 per carton. Now, each carton is $15. We multiply it by 5, that is 5 times $15. That gives us $75. We take it to the total invoice column. There is no need for details and there is no need for subtotal since this is just the transaction. You can also include this 75 here as details and even include it as subtotal, but to save time, we take this transaction straight to the total invoice column since there are no adjustments to be done in relation to this $75. Let us also assume that on the 5th of January 2021 that we purchase goods from Ben costing $50. Now they didn't tell us what we purchased, but we believe that this purchase is on credit because Ben's name has been mentioned. Or simply put, the question puts it this way, that we purchase goods on credit from Ben for $50. Nothing was said about what was purchased, but from the expression, it is clear that it is credit transaction. And since it involves credit transaction, we want to make summary of all our credit purchases. This transaction should also be included inside the recording in the journal. Now we have January 5th. The person's name is mentioned that we purchased goods from Ben, just as we mentioned Mustafa here. Then the amount of credit purchases made from him is $50. We take it to the total invoice column. So as at date, we have total credit purchase of $75 plus $50. Let us assume that on the January 7th, 2021, we purchased 10 ladies' bags from Mr. Lee at a unit price of $20 per bag. Now, this transaction also involves some discount which we call trade discount. Let's assume that there's a discount of 5% on these purchases. How do we record this transaction? Firstly, under the particulars column, the name of Mr. Lee will be written. Then what we purchased from him will be analyzed under it. That is 10 ladies' bag at $20 per bag. That gives us about $200. Then we compute 5% discount on $200. So we have 5% of 200, which is 5 over 100 times $200. That gives us $10. And when we deduct $10 from $200, it gives us a balance of $190. Let's see how this will be recorded in the purchases table. So we have on January 7th, the person we purchased from is Mr. Lee. His name is written here. What we purchased from Mr. Lee is 10 ladies' bags at $20 per bag. That is 10 bags times $20. That gives us $200. Then we less the trade discount, which is 5% of $200. That gives us 5 over 100 times $200. That gives us $10. So you less the discount of $10 from $200. So $200 minus $10 gives us $190. We bring it under the subtotal and finally transfer it to the total invoice column. So if you add up the total goods purchased on credit, we have $75 from Mustafa, $50 from Ben, and finally $190 from Mr. Lee. If we add up $190 plus $50 plus $75, it's going to give us $315. It is this $315 that will be regarded as our credit purchases for the period. So we have total to purchases account $315. It is this $315 that will now be posted to the debit side of Victory Enterprises purchases account. Recall that in the purchases account, both cash purchases and credit purchases are recorded in the same purchases account. We have seen that the purpose of the purchases daybook is to summarize the total credit purchases. On a separate note, individual accounts will be opened for Mustapha and credited with $75. Individual accounts will be opened for Ben and credited with $50. An individual account will be opened for Mr. Lee and credited with $190. The trade discount does not appear in the ledger as this represents a discount on the catalog price of goods purchased on credit. In summary, the purpose of preparing the purchases daybook is to obtain the total goods purchased on credit, which will be debited to the purchases account. And thereafter, the individual suppliers that will purchase the goods from them will be credited respectively. We have seen how credit purchases are summarized using the purchases daybook. Assuming these transactions were to be posted directly to purchases account, you can imagine how cumbersome and how clustered up the purchases account will look like. And this is why summary of purchases on credit are made in the purchases daybook and thereafter transferred to the purchases account.